Hello and welcome to Receipts from Trade Receivables. So here's the question answer required. Calculate the receipts from trade receivables for January to June using the following information. So part A, the amount of trade receivables at the 1st of January is £14,000. Credit sales are budgeted to be £30,000 per month from January to March and £40,000 per month from April to June. C, half of the trade receivables pay in a month for sale and take advantage of 2% cash discount allowed. D, the remainder of trade receivables pay in a month after sale without cash discount. However, 3% of these will not pay and should be regarded as irrecoverable debts. So I put together a template for the solution. Top we've got January, February, March, April, May and June. And then this one I've got a month of sale, cash discount, month after sale, irrecoverable debts and receipts for the month. Now to start off, I've just put for myself, I made a little note at the top. So the amount of sales, credit sales for each month, I put at the top of each month because I'm going to use them on my workings in a moment. So January is 30,000, February is 30,000, March is 30,000, April we're told was 40,000, May is 40,000, and June is £40,000. Now, part A, the amount of trade receivables at the 1st of January is £14,000. And we're told the remainder of trade receivables for each month is paid in the month after sale. So that was the balance from December. So the month after sale, we received in January, or potentially received, was £14,000. But we're told in Part D, the remainder of trade receivables pay in the month after sale without cash discount. However, 3% of these will not pay and should be regarded as irrecoverable. So without £14,000, we expect 3% of them not to pay. And 3% of £14,000 is £420. So that's dealt with the part A bit, so we can forget about it now. Right, credit sales are budgeted £30,000 January to March, £40,000 April to June. So we've made a note of that. Part C, half of the trade receivables pay in a month of sale and take advantage of 2% cash discount allowed. So the month of sale in January, credit sales are 30,000. We're told half of them pay in the month of sale. So it's half of £30,000. So that's going to be £15,000. Similarly for February, it'll be £15,000 as well. And March will be £15,000 as well. Now April, the credit sales were 40,000. So half of them is going to be 20,000. May again, half of 40,000 is going to be 20,000. And June, half of 40,000 is going to be £20,000. Now we're told of them, 2% of them will take a cash discount allowed. So we'll work out 2% now. So 2% of 15,000 is £300. They're going to receive a cash discount of £300. So now they're not going to pay the full 15,000. They're going to take away 300 and they're going to pay 14,700. And that's going to be the same for February and March because the credit sales there were the same amount. And then in April, it'll be 2% of 20,000. Likewise in May and June, it's going to be 2%. So they're going to get cash discounts of £400 each month. Now, I need to know the amount they're going to receive in February that are related to January. So basically, go back to Part D. Well, Part C, half of them pay in the month of sale, which means the other half pay in the month after sale. So in January, there are £30,000 in total. Half of them are going to pay in the current month. Then they're going to take the cash discount. The other half is going to pay in the month after sale. So that's going to be £15,000 there. For March, it's going to be 15,000, half of that, which is 15,000, half of 30,000. Again, in April, it's going to be half of the previous months, which is 30,000, so that's 15,000 again. In May, it can be half the previous month's credit sales. Now, this time they were 40,000, so it's going to be 20,000. Likewise, in June, the previous month's credit sales were 40,000, and half of them they're going to receive potentially in June, so that's 20,000 as well. But you got to remember, Of them, 3% were not paid, should be regarded as irrecoverable debts. So I'm going to work out 3% of each one. So in February, 3% of 15,000 is £450. So we will not expect to get them. It will be the same for March, because it's 3% of 15,000. The same again for April. In May, it'll be 15% of 20,000. So not 15%, 3% of 20,000, which is going to be £600. And likewise in June, it's going to be 3% of £20,000. So they're the amounts we're going to treat as irrecoverable debts. So we do not expect to get these amounts of money. Now the receipts for the month then. So in January, it's going to be 15,000, take away 300, plus 14,000, take away 420. That's going to give us £28,280. In February, it's going to be 15,000, take away 300, plus 15,000, take away 450. That's going to give us £29,250. March, 15,000, take away 300, plus 15,000, take away 450. And again, that's going to give us £29,250. April is going to change. You've got 20,000, take away 400, plus 15,000, take away 450. That's going to give us 34,150. May, 20,000, minus 400, plus 20,000, minus 600. It's going to give us £39,000. And finally in June, it's going to be 20,000, minus 400, plus 20,000, minus 600. Which again is going to give us £39,000. So that's your receipts from trade receivables budget.